Hi, everybody. This is Robert Chadwick with American Mortgages, and thank you for joining our recent seminar with our partner, Halo. We have David with Halo that will be doing a presentation on how to save tricks and strategies on FX. Now, we know we have a lot of people that are transferring funds on a daily basis, whether it's for a purchase or a refinance. And I think the insight that Halo and David has to offer will be of significant value. So with that stated, I will turn it over to David. And once he's finished, then we will discuss the mortgages, and then we'll have a questions and answer session at the back. So David, thank you for joining us. Please, you have the stage.
Thank you, Robert. Thanks for that, and thanks to American Mortgages for setting this up with my colleague Stephanie and Dipti from American Mortgages for putting this together. So this is going to be a 15-minute session, very short and sweet, to cover some of the details of the nature of the foreign exchange market, some of the things that are influencing exchange rates right now, and that do so in general. A bit about the markets, a little bit about exchange rate movement overall. I promise I won't get bogged down in the jargon and acronyms because everybody's eyes glaze over. Some of the tools and tricks that you can use to take advantage of exchange rates, to target the right exchange rate and manage the risk of negative exchange rate movements as you work on your investment portfolio of properties. The last thing you want to be doing is losing money on the foreign exchange transactions because it just eats into your yield. It is worth noting that this is a very short encapsulated version of the things we do to help our clients. We're involved specifically in physically delivering foreign currency payments. We don't get involved in any kind of speculative investment, but there'll be a Q&A at the end, and we're always available online and on the phone if you need further information. So if we move on to the second slide in this presentation, some of the things that are influencing the market at the moment. The foreign exchange market is enormous. It is the largest financial market in the world. $5.1 trillion per day are pushed through the market, which is bigger than any of the share markets, even if you add them all together. The Bank of International Settlements is due to do another review of that next year. The largest volume of the market is speculative. Algorithmic trading platforms are pushing billions of dollars in and out of the market at a time, looking for tiny movements. So the market that we operate in is a niche of something like 5% of the overall volume, helping people to actually physically settle funds across different currency pairs. It's a market that's driven by pure supply and demand because it's an over-the-counter market. There is no central hub for foreign exchange. You know, millions of banks are doing transactions with each other all the time, all at slightly different exchange rates. So getting the best exchange rate for you is a bit of a skill set, and we'll walk through how to use that. And as it's a pure supply and demand market, obviously it's driven mostly by speculative flows. But we'll cover some of that off. But the speculative flows obviously are driven by the usual sentiments of fear and greed. As you can imagine, the Russian invasion of Ukraine or parts of Ukraine sent shockwaves through not just the foreign exchange market, but obviously commodities and other markets. And those all have an influence on the foreign exchange rates. The US dollar is considered to be the safest place to put your money in times of need. So unfortunately, if you're looking to buy US dollars, the last thing you need is geopolitical risk, because investors will be buying the US dollar, strengthening it and making it more expensive. So you can imagine the Russian-Ukraine war had an enormous impact on that, and an impact on commodities, which are mostly traded in US dollars. So if the commodities are strong, perversely, the US dollar tends to be a little bit weaker. So you get this sort of interplay between the risk and reward of interest rate movements, exchange rate movements relating to that. As we're sort of recovering from COVID and the shutdowns, and as we're recovering from the the financial impact of that around the world, central banks have been moving interest rates up to try and curtail the huge inflation that's come with the rising commodity prices and the shortage of supply. Central banks will, over the next year, take full credit for having controlled inflation, but as it's a year-on-year calculation, inflation drops as the most expensive parts of the inflationary cycle drop off the last 12 months of numbers. So whilst the central banks will take full credit for it, actually it's a pattern of the statistics rather than anything else. And we're also in a situation where central banks, because they're reaching the end of their interest rate raising cycle, because inflation is starting to level off, and we're starting to see slightly softer data from around the world, and slight improvement here and there. The markets are also, investors in the market are starting to shuffle their money around to try and take advantage of the best yields and not get caught out by any sudden changes. The next slide really is about the just an example really of an exchange rate. So the sterling US dollar exchange rate. And just to give some idea, you know, I won't dwell on this too long, but just to give some idea of the variation we see in the value of your money if you're buying into US dollars in this instance. Because the markets have been volatile, something over the last year, we've seen the US dollar rate, sterling US dollar rate, up at 131 and down at below 107. And you can see with the you know, the digits on the right there, just how much influence that has over your buying potential. Now, getting the right end of that movement is the important part of it, and we'll come on to talk about how you might do that. The next slide covers the sterling euro exchange rate, just to give some impression of the same sort of volatility over that period. Sterling euro tends to be slightly less volatile than the sterling US rate, but nonetheless, the same influences apply, the same volatility applies in certain situations. And both the UK and the EU are trying hard to work out whether they've actually raised interest rates far enough, whether there's more they need to do. So central bank comments tend to be market influencers just as much as their interest rate decisions. Next slide is really more about some of the tools that you can use to take advantage of those exchange rate movements. And how you move forward with this will depend entirely on what it is you're trying to achieve. So if you're looking to sell sterling, let's say, and buy US dollars, and you need to do it urgently because you need to place a deposit on a property that you're buying, then you may want to take advantage of a spot contract, which is buying on the spot, for want of a better expression. Trade now, pay now. I love that. But this is about booking an exchange rate now to settle now or within the next few days to get your sterling into US dollars and get it out to make your payment for your deposit. If you're buying a property outright, obviously, then you might not be on this this call anyway, or you might be buying parts of your portfolio outright. But obviously, the exchange rate movement is going to have an influence on how affordable your new investment is, and it's really important to get the timing of that right. Part of what we do with all of our clients is work through what it is they're trying to achieve and make sure that we are able to help them achieve that. If you've got to make the payment today, then you don't have a lot of opportunity to take advantage of the market movement. But if you've got a few weeks on your hands, then there are opportunities to take advantage of the better part of the exchange rates, depending on your time frame. If you're looking to make a payment, but you actually don't need to complete for a few months or 6 months or up to 2 years, but you need to buy some US dollars and the exchange rate is particularly attractive, then you can do that on what's called a forward contract, where we fix the exchange rate today, but actually the settlement date is set up for a date in the future that suits you. You'll only want to do that if you get an opportunity to buy at a particularly attractive rate. So if the sterling US dollar rate shot up to 130, let's say, please, that would be nice, then you might want to grab some US dollars at that rate and fix the settlement date for that out to a date in the future. It's a very useful contract for people who are in the situation where they've got a plan, but they have yet to execute it, or they've got a date in the future to execute it. If, on the other hand, you're looking for a particular exchange rate, but it's not quite happening as yet, but it's within the realms of possibility of the market movement, you might want to place an order in the market to try and target that exchange rate. And you can do that. Let's say you said, I really would like to get 125. That would make my investments work. Then we can put an order in the market to target 125. And it sits there as a latent order unless it's triggered. And if it's triggered, or you cancel it, or you move it. So it costs nothing, but it's a really useful tool. It's a tool that's used by investors to target particular exchange rates. We use it for our clients to take physical delivery of those currencies when the order is triggered. You can also place an order in the market to underpin the exchange rate. So if your investment doesn't work below 120 on the US dollar rate, you can place an order in the market that guarantees you 120. If the market dives and carries on going, your order is triggered and you're able to buy your dollars at that rate. And at which point, once the order is triggered, either a limit order placed at the top of the market or a stop loss order placed at the bottom of the market, once that's triggered, then we would have a discussion with you about whether you want that to be an immediate trade, a spot contract, or a forward trade, and we're booking it for a date in the future. But at least you've fixed the exchange rate at that point. There's another tool that we use, which isn't on this slide, which is a regular currency transfer. So once you've bought your property, if you've got rental payments going in one direction or mortgage payments going in the other, which you probably will have, or you've got maintenance payments that you need to pay or whatever. If there's a regular transfer you need to make on a monthly basis, you can fix the exchange rate for up to 24 months worth of those payments at a fixed exchange rate up front. So your costs are all guaranteed. You can budget for everything. It's a really useful tool, particularly for investors in properties. The next slide, I think, really just covers off a little bit about us. This is a sales pitch, obviously. I'm joking. What we do for our clients is make sure that they have somebody in our team that looks after them on a day-to-day basis. We're very much a service-orientated business, so you get a currency specialist that looks after you on a day-to-day basis and will look after your particular needs, get to understand what your requirements are, and help guide you through some of the tools that I've covered in very, very whirlwind manner as they apply to you. We'll very happily work with you to do a health check on your currency requirements and see where there are opportunities for you to do better. Obviously, we're regulated by the Financial Conduct Authority, so all funds are segregated in client accounts. And our service, I think, you know, if you look us up, and I hope you do, then our service is picked up in the FIFA ratings. I think that's an international testimonial site, but we're platinum rated, which is what we're one of very few companies that are rated in that way in provision of customer services. And this is really just a sort of encapsulation. So I would urge anybody who's talking about investing in property to start planning your currency requirements well in advance. You might not need to do anything yet, but at least you'll have a pattern in place or a plan in place to do that. So really don't leave it to the last minute, because you know it's Murphy's Law, isn't it? That if you have to do it at the last minute, the rate will be appalling. You can register for an account with Halo absolutely free of charge, and we have email market updates which cost you nothing, but will give you a sort of a general guide of what markets are doing and how the exchange rates are moving. That is absolutely the fastest presentation I've ever given on what Halo Financial does for a living. But as I say, there is a Q&A, so if anything I've mentioned sparks an interest and you'd like more information about that, please feel free to ask your questions or contact us directly. You're very welcome to. That's me. Thank you, Robert.
Really great information, David. Thank you. You know, I think We always receive requests from companies similar to Halo, FX traders and so forth, that have asked to partner with us because it's obvious that we do a lot of transactions in real estate, and a lot of high net worth individuals, or just in general, real estate are large movements of money. And we vetted Halo quite well, and I think we're confident in the partnership that we've established with your company. So one question I have before I start my presentation is, when somebody is looking to do a purchase, would they, we have a specific date when the purchase is supposed to close. Should they reach out to you during the process so they can, I guess, spot a good rate, or whatever the terminology for it would be? I mean, would that make sense?
Yeah, ideally, from our point of view, we'd want to speak to people as early as possible in their cycle, maybe even before they've found the property, when they're starting to look at the opportunities and options. Because if the timing of the currency exchange rate improves their buying potential, that would be a very nice thing for all concerned. Or if they've found a specific property, obviously buying it at the right time is the first good step in the investment program. So, if you can purchase at the most affordable price because the exchange rate was good, and you can plan the return on your rental, or the cost of the ongoing mortgage payments in advance to make sure that they're in your favor, then it makes the whole investment cycle a much more attractive prospect. And obviously that's what we're all involved for, isn't it?
Makes sense. Makes sense. Thanks. So I'll start my presentation now. I know probably a lot of you are already familiar with American mortgages, so I'll go through this fairly quickly, but we'll just go over what's needed to qualify for a U.S. mortgage loan, whether you're foreign national or expat, purchase, refi, etc. I maybe a little bit longer than what David's presentation was, and then at the end, I'm sure everybody has a lot of questions for myself and David, and then we'll answer them from there. Thank you for joining. Our only focus with American Mortgages is providing U.S. mortgage financing for foreign nationals and expats. So 100% of our clients are earning and living abroad, but getting a U.S. mortgage loan, whether it's for a purchase or a refinance. The general mortgage overview: all of our loans require no U.S. credit. There's never any AUM, so all of our lending is dry lending, meaning that there's no requirement for you to open up a bank account with the bank or the financial institution that would be granting you the loan. Foreign income is absolutely allowed. We have loan programs in all 50 states. So regardless of where you choose to buy the property, we do have a loan program for you. If you're a foreign national, we can get up to 75% financing in all 50 states on a purchase, 70% on a cash out refi. If you're a US expat and you're still maintaining credit, then it's 80% on a purchase and on a refi. In general, our loan approvals are within 72 hours after you provide all the paperwork. Closing time for an average US mortgage, it really just depends on how you're signing it, but it's anywhere from 30 to 45 days. And you can sign your closing documents in most major countries in a variety of ways. So it doesn't mean that you have to go to the embassy. We have a variety of ways that you'll be able to close your loan. Again, purchase, refinance, and equity release. One thing that's quite unique to the US, if you're not familiar, is regardless of your age, whether you're 19 or 99, you still get to take advantage of a long tenure, a long amortization over your loan, which could be 30. We even have 40-year tenures. So it allows you to maximize the yield. We also have a very good, a very effective program for investors, which is a 10-year interest servicing only, which is actually a fixed rate that converts after that 10-year period to a principal and interest loan without any adjustment in rate. So really solid program. We also have loan programs that are treated truly as commercial loans, because as you're buying these properties as an investment, that's how we look at it. So it's very common sense underwriting. We can qualify you only on the rental income of the property. So people that are self-employed, people that maybe don't show their true income or their serviceability, this is a fantastic program, and the same LTVs apply. And I think one thing that we are very, very proud of is 97% of the loans that we approve actually get approved, or 97% of the loans that we submit actually get approved. We have people in 12 different countries. So you have 24/7 service, which makes a big difference, especially if, say, you were dealing with a bank in New York, for example, and you're having to stay up at 3 a.m. to be able to find out or how to submit a document, et cetera. So we're in your time zone, we're in your language, and we are accessible 24/7. So our specialty, we have a minimum loan amount down to 150,000, which I think that makes buying a U.S. property affordable for pretty much everyone, especially if you talk about the high leverage amounts of 75% for a foreigner and 80% for an expat. All of our mortgages, again, do not require any asset under management, meaning you do not have to open up a bank account. Mortgages where the serviceability shows low, again, you're qualifying only on the rental income of the property. And how that's done, there's nothing, crafty about it. It's a very straightforward loan, just like you would do a commercial transaction. You go off of the cash flow of the property. So when we do an appraisal for the property, we will also order a review of the rental analysis. And that rental analysis will give us what the property should rent for, and that's the amount of income you'll qualify. It's normally on a one-for-one basis. So as an example, if the mortgage is $2,000 a month, the rent is $2,000 a month, the loan qualifies. Because we do a lot of work with private banks, we are very good at complex ownership structures, trusts, et cetera. So not everything in the US can be used, especially if you're getting mortgage financing. But if you do have a complex structure, we are certainly willing to look at it. Something that is very common now, and it doesn't always mean that it's distressed, but it could be distressed. We offer bridge financing. What bridge financing is if you want to close a transaction and you say you want it to appear as you're closing with cash, you're getting a really good buy, but it needs to close within a week. We can arrange the financing, which would be same as cash. We've transacted these in as little as 3 days. Certainly the interest is higher, but normally there is no prepayment penalty. So once you're able to take advantage of the transaction, then we come in and we take it out with the long-term financing. So our loan programs, we'll go through these quite quickly. The AM Express Plus, this is the one that we were saying that qualifies only on the rental income of the property. Again, all of our loans, no US credit is required. Loan amount for the particular program can be up to $3 million. And we have, again, the 30 to 45 day closing. Our AM Investor Plus, this is a very unique program. So we consider this our full income documentation loan. Because we're doing loans around the world, if we had to go through tax returns and pay stubs and NOAs or whatever they may be called, translate them, et cetera, it would be almost impossible. So how we do it in lieu of tax returns is we require a letter from either your employer if you're employed or your accountant if you're self-employed. And this letter, we have a template for it, is a very simple, straightforward letter. What it does is it states 2 years of income and current year to date. With that, that is sufficient for your income documents, and you actually qualify for the high or the lowest rates that are available. When it comes to no U.S. credit, I should probably expand on that a little bit more. We do have loan programs that have absolutely no credit requirements. However, again, just like the income letter, if you're able to provide a tax return from your home country, it makes a big difference. You know, we still need to show that there is credit worthiness, and a credit report from your home country for all of our loan programs are sufficient in lieu of a U.S. credit report. So our U.S. expat investor, what we try to do if you're a U.S. expat is make it look and appear exactly as if you had walked into a bank in the U.S., earning your income and living down the street. So what makes this quite unique is we do not need a W-2. Your income can actually be in foreign currency, and your employer can actually be a foreign employer. If anybody has gone through this in the past with their bank, you know, it's pretty much a no-go in many cases. But again, because all of our clients are living and earning their income abroad, this is all we do, and we are by far the industry experts on this. So any issues that you have as a U.S. expat, you certainly will not have with us. So the high net worth mortgage, you know, we're very fortunate to be partnered with a lot of private banks. And, you know, they have a lot of trust in us, and we, you know, we value their clients, you know, in their relationship. So we know very wealthy people have very complicated tax returns, you know, multiple jurisdictions, et cetera, multiple companies perhaps. So we have a high net worth program that makes it very easy if you're a high net worth individual to qualify on a U.S. mortgage loan using only your liquid portfolio. That would mean cash in the bank, stocks, bonds, perhaps even crypto with some lenders. And what we do is, without any encumbrance of this portfolio that you have, we take a 2-month average and we use that as your income to qualify. I mean, normally you have to have at least 5 million liquid to qualify on something like this. And it really depends on the, you know, the loan amount that you're trying to achieve. But, you know, we've done these as high as $100 million. So there really is no limit, but the LTV could actually be reduced. Normally on these, the LTV is somewhere around 60–65%. So in summary, we have over 150 onshore lending relationships, meaning that all of the lenders that we deal with are very specific for, again, our clientele, which is foreign nationals and expats. We are very private, independent, and confidential. Personal and responsive team, you know, as I mentioned earlier, because we have people all over the world, at any point in time, 7 days a week, you can certainly reach somebody, whether it's your loan officer or one of the processing team members. We can give you a basic outline of what we're able to do without any paperwork. So if you have a scenario and you say, you know, hey, you know, Robert or your team or whatever it may be, whoever your loan officer is, you know, I have an idea, this is what I'd like to do with the structure and so forth. We can normally let you know if it's possible almost immediately. Again, we have international coverage. If you speak another language, or, you know, you're not understanding English well, we can certainly assist with a loan officer that speaks your language. Flexible terms, whether you're looking for 30-year financing, 40-year financing, interest only, short-term lending, whatever it may be, we normally have a program that fits. Again, huge high net worth experience. And we always like to say that most roads lead to GMG, or American Mortgages, meaning that we have such a good network globally that if it's going through some sort of third party, we tend to see it maybe 2 or 3 different times submitted by different people. So in summary, we do all the work. So we negotiate on your behalf, not on the bank's behalf. So we make sure that whatever the best rate or program is available, that you get that. We are direct and transparent. When you apply for the loan, within 3 days, you get loan disclosures. Those loan disclosures they are a breakdown of what all the costs are involved in the loan. The loan disclosures that are initially sent out and acknowledged has to be less or equal to what it is in the final, meaning that when you go to the closing table, you are not going to be surprised that your closing costs is significantly more. For most of our programs, there's no application fee or deposits, meaning that you can get pre-approved for a loan, which is always the most important thing to do before you start shopping. We issue you a letter. Once you have that letter, then you're able to show the seller or the seller's realtor that you've been approved for financing, which, if you know anything about making an offer in the US, it's a mandatory requirement unless you're paying cash. And with that said, thank you. I'll stop sharing the screen. We will open up the webinar to some questions and answers. So there is a question box within the bottom portion of your Zoom. If you just want to type the question in, I'll read them off, and then whether it's to myself or it's to David, I will answer it. At the end of the webinar, if you choose, we will send a recorded copy of this within a few days that you can review or share. Or if you weren't able to stay or you missed the beginning of the webinar. So let me get to the questions here, David. Okay, first question. Since you offer foreign or forward contracts, are you offering a CFD or some sort, and where are you regulated as a financial product provider?
It's a really good question. So we're offering forward contracts for physical delivery. It's not a contract for difference. We're not involved in that market. The way the MiFID regulations are written, there is an exemption for physical delivery contracts where you'll pay us and we'll pay you and everybody delivers on the contract. These are not contracts that can be reversed for profit or loss. And we're regulated within the UK with the FCA. Actually, somebody asked in the questions about our regulation number, and I've shared it in there. But if you'd like that, I can share it with you separately. The question of contracting for difference is one that comes up a lot in our conversations, and I can't count the amount of business that we turn down where people are trying to speculate using our service, but there are loads of companies out there that offer that kind of service and are regulated as investment financial services companies.
Yeah, thank you, David. Yeah, I'll answer the questions that you answered on the chat just so everybody can take advantage of it. So I'll just read it out and then you can answer again.
Okay.
So any thoughts on the trends towards crypto settlements using example XRP for large dollar amounts at very low costs?
Yeah, we're not involved in the crypto markets at all. I truly am not qualified to talk about whether it's a good idea to use crypto payments or not for property purchases. I have to say I've not come across mortgage companies or loan companies that accept payment in crypto. So if you have, that's quite interesting.
It's interesting that you would bring that up, because there was a company in the US that actually started allowing to take payment in crypto and even considering doing mortgage loans in crypto. But after all of the I guess the turmoil over the last 6 months to a year, they scrapped those plans. So I'm sure it will happen eventually, perhaps, but at least for now, at least the type of loan transactions that we're doing, we're not seeing anything in crypto. So, and then I don't know if you want to say it over the call, but if you want to take down what Halo's FRN number or FCA number is, it's
Yeah.
FRN 528727. So if anybody has questions on their FCA regulation number, that is it. And if we can also provide that in the webinar recording that goes out as well. Okay, so another question: are these considered third-party remittances?
Yeah, I haven't answered that because I wasn't quite sure what the question involved. If we open a trading facility for our clients and go through the due diligence required for that, then we require that the money to settle the contract comes from our clients, and then the outbound payment is made as a third-party remittance from our point of view, but it's made with the remitter's name as our client. So I hope I've explained that well. So, for example, if Robert wanted to make a payment for his mortgage, then we would open a trading facility in Robert's name. He would send us the settlement for the contract that he booked, the currency contract, and then the US dollars would be sent out to the beneficiary that he stipulates, but with Robert as the remitter. So I hope that answers that question. If your question refers to something else, then please let me know.
So, David, one thing I thought was very interesting, and I think it would be very useful for our clients, especially when they are projecting, what their yields are or what the cost of owning the property is. As you had mentioned that they could fix a specific rate for, if I'm not mistaken, you said a 24-month period if they have
Yeah.
regular payments going out. So maybe you can kind of expand on that, because I think that would be very relevant to all of our clients.
Yeah, absolutely, absolutely, and it comes into use for people who are investing in property, but also people who are moving internationally and therefore have payments to and fro for whatever reason. So the mechanics of it are that if you know that you are going to have a set amount of rental income to move on a monthly basis, or you've got a set mortgage payment to make on a monthly basis, or indeed you're setting aside, a maintenance payment that has to go through on a monthly basis, then you can agree anything from 3 to 24 months worth of those payments, and we fix a single exchange rate for the whole life cycle of that contract. And as you say, I mean, the benefit of that is that you can budget exactly. There's no worrying about the fluctuation affecting your yield and your income from the rental of the property. Equally, there's no fluctuation affecting the cost of your mortgage on a monthly basis if you're having to pay dollar payments for the mortgage. So it can be very, very useful. And as I say, it's very flexible in terms of the numbers of months you might want to fix. We also offer what we call a flexible currency transfer, where if you don't want to fix the exchange rate, but you do want it to go through almost on a standing order basis each month, then we can agree with you a set spread compared to the interbank exchange rate, and you remit, your £1,000, £2,000, £3,000 a month, and we remit an agreed amount of US dollars against that. And quite a number of, particularly when exchange rates were very low, quite a number of clients preferred that because there was a very good chance the exchange rate would improve over time, so they would take advantage of the improving exchange rate. So there are a number of ways that we can play that, and as I mentioned in the short presentation, our job is to find out what works for you and make sure that we recommend things that would be useful to you. And if that's going to be a useful tool, then absolutely that would be part of the conversation.
Very, very, very interesting, and I think again super helpful for all of our clients. So another question. This is new to me. Can you run me through the regular transfer process? So I think what they mean is, how would this work if somebody was able to or needed to use your services?
Yeah, so pretty much as I've just described, that we'd agree an exchange rate. We'd agree the number of payments that were going to be made on that exchange rate, and then we would set it up on the basis that you would set up a standing order with your bank to pay us that amount of money on a monthly basis. Tell us where the dollars, the purchase dollars or the purchase sterling or purchase euros need to go to each month. And then that goes through pretty much on the nod. Everything is agreed and it clicks through the system without any delay. So your funds arrive, it's converted, and that money goes straight out the door, and we confirm to you receipt and remittance on an automated basis.
Okay, and David, where do these funds go? So say, as an example, I'm an investor that's living in Europe or Asia or Middle East, wherever it may be, and I need to fund an escrow account. So I'm funding from my home bank. Does it need to fund from my home bank to a US account to the escrow account, or can it fund from my foreign bank account directly to the escrow payee?
To a large degree, I think that's down to the individual's preference. If you're needing to convert the funds, then obviously you could send sterling straight into a US dollar escrow account, and the money would be converted on the way through. But you're not in control of the exchange rate you get at that point, and so you don't have any choice really over that. The advantage of using a company like ours is that if you need to fund that escrow account, then you can choose the timing of that transaction, and you can also use forward contracts or whatever kind of contract you prefer to take advantage of market movement in your favor. So I guess it's down to the individual. If you want pure simplicity and you don't care about the cost, but it's unlikely if you're an investor, to be fair, you could just send the money straight from your bank account to an escrow account, or into obviously the property developer, or to fund the mortgage. But if you want to be in control of that part of the transaction, then a company like ours comes into play in helping on that.
No, I think I was really more referring of if they're using Halo services,
Yeah.
can they fund direct? I mean, how does it specifically work? They have to fund into Halo's account, and then Halo funds
My
the
apologies.
escrow
I
account or
misunderstood.
whatever it may be. Is that how it works?
Yeah,
Okay.
I misunderstood. My apologies. So if you and I agreed an exchange rate, then we would send you through a contract confirming that immediately. You pay your sterling, let's say, into our client account, and on receipt of that, we convert that to US dollars, and you tell us where you need those US dollars to be remitted to, and we take care of the remittance. So it's a very straightforward process. The clever part of it is buying the currency at the right time. The simple part is the actual movement of money.
Okay. Another question. Are there countries where there's difficulties remitting money? Obviously, we see issues with China, India, even Korea, for example.
Yeah.
I mean, what's the process for this? I mean, is there any any suggestions or any comments that you may have, or are there some countries that are just kind of no go for you guys?
Well, unfortunately, it all comes down to mostly local exchange control regulations, or sanctions lists, and UN sanctions implied on those countries. So, for example, Russia, it's practically impossible to move money in and out of Russia at the moment because of UN sanctions lists, and so it should be to some degree. It does tie up private individuals in something which is nothing to do with them, I know. But there are other countries where it's very difficult to move money in and out of the countries. I know a lot of South Africans have an awful time in trying to move money out of South Africa to invest overseas. Many of them use offshore banking specifically to avoid bringing their money into South Africa because of that. So every instance, I guess, we'll look into to see if there is a way to accommodate that. but there are certain such circumstances where we just can't get past it, unfortunately. So people they find clever ways to do those things. Moving money out of China tends to come through Hong Kong, and then we trade in the CNH rather than the CNY. But there are ways and means.
Okay, thank you. Thank you. Another question, this one appears to be for me. The AM investor loan, is the LVR higher than the express loan? And does the current local liabilities or assets come into the picture and limit the borrowing capacity? So for all of our loans, the LTV is the same unless the loan amount is significantly higher. So if you're a foreign national and you're looking to do a purchase, it is 75% loan to value on a purchase, and on a refinance or pulling cash out, it's 70%, regardless of the program. If you're an expat, then it's 80% across the board, whether it's a purchase or a refi, assuming you still maintain a sufficient US credit score. When it comes to qualifying using the income letter, then certainly we will take what your current housing is, or any other debt that you have in the US, and we're going to factor in a debt to income ratio. But remember, because you're buying these properties as investment properties, you do get a boost, at least with some income from the rental property. If you're going off of only the rental income property qualification, meaning that we're qualifying you only on what the projected rental income is, then issues such as your current housing in wherever country you're living isn't a factor. It's only going to qualify strictly as a commercial cash flow transaction. So hopefully that answered your question. This looks like a follow-up to that. Also with the AM investor employee letter, does it take into account the gross or net? And also, in our case, there's a 10% paid on top of the gross as a contribution towards retirement. In general, we always go off of the gross rental income. I mean, it would be really difficult to tell what somebody, especially when you're talking about year-to-date income, what their net would be, what your tax basis is, what you're taking the deductions and so forth. So this is actually a very clear and an easy way to document your income. Everything will be based on however your employer, if your employer is writing the letter for you, they probably have something that they go off of, and that would be used. If you're using your accountant, then it's going to go off of whatever he's using as your gross taxable income. We have a question. Please share a copy of the recording with me. Absolutely. Everybody that is attending or everybody that signed up and was unable to attend will receive a copy of this webinar. It will also be included in our weekly newsletter that comes out probably within the next couple of weeks. And then you can also always find it online on our website, americamortgages.com, our parent company, gmg.asia, or on our YouTube or social media pages. Question is, what are mortgage interest rates? Well, I mean, that is a very good question. I mean, obviously, interest rates have gone up. But I think if you take a look at the historical rates in the US, they're still reasonable. I mean, certainly we all want to go back to the days when interest rates were, 3% or sub 3%, or foreign nationals. I mean, we were getting some below 4% fixed for 30 years. Certainly that's not around anymore. I don't know if we will see that again. But the one thing that we always state, especially in the mortgage businesses, you can't time the market. You can't predict when the interest rate is going up. And it's probably, maybe it's not as accurate as FX, but, but if you can get the best deal on the property, that's when you should strike. That's when you should buy the property, because you're not always going to get these deals, but interest rates at some point will come down. I mean, that, at least that's what we feel. So we always state that you marry the property and you date the rate. So at any time when rates go down, you can always refinance, but you're always not going to get this perfect property. To Robert, how can I get in touch with your staff or colleagues? Is there restrictions on US state to utilize your services? You can reach out to myself. My information will be posted after the webinar, or you can go onto our website again at americamortgages.com, and you can go on. We have a 24/7 calendar. So regardless of what time zone you're in, you're going to find a loan officer in that specific time zone, and you can schedule an appointment at your convenience with somebody there. As for the restrictions on the US states, there are no restrictions on US states, so it's all 50 states are available. Sorry, David, another question for me. It says, thanks, Robert. You mentioned 70% loan to value on a refinance. Is that the standard, or to maintain 75% loan to value in a refi second loan, when the value of the property increases, would we enter into a new loan with a new financier, thereby releasing to the purchase more properties? So thank you. And I think I understand the question. So in general, say you own a property, I'll just kind of put it as an example. You own a property in California, and you want to buy a property in Florida. So what we could do is we could refinance out the property that you own in California, assuming that there's equity, up to 70%. So you can get a mortgage to cash out for 70%. And we can do a purchase mortgage for the property in Florida for 75%. So again, I think, what makes the US unique is there's no restrictions, there's no cooling measures. So it's a truly, it's a truly a free market in how properties appreciate or depreciate. So there are no restrictions, at least, some lenders may, but in general, there are no restrictions on the amount of high loan to value loans that you can have. We do have portfolio loans. So if you do own multiple properties, we can certainly get that into one loan. And again, it works off of cash flow. But there's always some solution depending on the leverage that you're able to get. Okay, I think we already answered this question. It says, great presentation. I have a bank account in Taiwan and Korea. Can I wire funds to the US? So I think, David, that's sort of, you sort of touched on that earlier, but I think that might be something good to address as well.
Sure. It's a really interesting question, and the timing is perfect. We've struggled as a company. We've been in business for 19 years. We've always struggled to handle Taiwan dollar and Korean won. The interesting thing is that we are just setting up facilities to manage that with a new provider. I haven't got it up and running as yet, but I will have it up and running over the next 2 months, so that we can receive both of those currencies to buy US dollar. I don't know who you are, DK, my apologies, but if you want to drop a line through, I'm very happy to update you when we have the facility in place to do that. And I will be really pleased to have that in place, because it's been a sort of a lifelong challenge to try and achieve it. So I don't know if you want to get in touch directly, but I'll certainly update you when we have that in position.
Thank you, David. Another question. Hi, Robert. Do you provide access or recommendations to the following experts and service providers: CPA, tax advisors, real estate attorneys, estate and business planning, trust, life services, etc., available to foreign nationals? Absolutely. Part of our service, and I think, again, what makes us unique, when you're a foreign national or even a US expat, if you're a US expat and you're living abroad, things are foreign. If you're a foreign national and you're trying to buy into the US, things are foreign. So what we try to do, and much like, with David and Halo, we try to bring very vetted, very good partnerships with everything that a foreign national or US expat would need in order to make their purchase complete. So, a lot of people will do limited liability corporations, LLC, in order to hold the property. I mean, it makes sense for a lot of reasons. We can assist with that. We have a lot of people that require a tax advice. We just did a seminar in Hong Kong, Manila, Singapore, and Dubai, where we brought expert tax advice with us. So certainly whatever you're looking for, even if it's looking for a property in a specific state or a specific location that meets a specific match, again, we have vetted partners that we use for this, and this is all free services. Free services from us. However, the partner charges, that's between you and them, we receive no benefits from that. Next question, does Halo work only with UK residents? I'm taking they're detecting that very proper British accent that you have, David.
Very, very polite of you. So I see the next question follows on from that, because we have similar services in our country. The answer is we are based in the UK. We're based in London, but we have clients, and I guess as a result of that, we do have a predominantly UK clients, as you'd imagine. But we do have clients all around the world, Australasia and Asia, Europe and Africa and the US. So no, we are predominantly UK based in terms of our client base, but we do have clients from all over the world. I mean, obviously the service that we offer is very much about the service. The exchange rate or the exchange rate advantage is the sort of the end goal, but the service levels to help you achieve that is the thing that we pride ourselves on. So I'm very happy to provide comparison with other companies that offer foreign exchange services, without a doubt.
Okay, so I think this next one probably relate to you. How are interest rate movements likely to affect FX rates?
I mean, it's a really apt question at the moment, isn't it? Because central banks are all sort of walking that fine line between crushing the economy and trying to control inflation, or being seen to control inflation. I'm a bit of a cynic when it comes to central banks. But the interesting thing is that with the Reserve Bank of Australia choosing not to raise their interest rates at their last meeting, having done so about 8 times previously, the Federal Reserve is kind of in a similar position where they're being pressured to not do too much more. I think we probably will get another 25 basis points out of them, but that might be the end of it. The general rule is that a higher interest rate will attract more investors into that country and therefore that currency. So the currency will strengthen up. It doesn't always follow that way, because there are obviously other geopolitical effects that have an impact on the exchange rates, but a higher yield tends to attract more investors. So if, for example, if the UK raises interest rates again, you will tend to see sterling gain a little bit of strength on the back of that. But the balancing act of all of that at the moment is that if they are seen to be raising interest rates too far and damaging the growth, very fragile growth that we're seeing within economies, then there's a good chance that that currency will suffer. So there isn't a hard and fast rule in these things. It really depends on what other countries are doing, what the impact would be on the economy. And we tend to be driven by what the bond markets interpret that move as being, and how it influences the sort of 3, 5, and 10-year bond return. So I wish there was a simple answer to the question. Unfortunately, there just isn't. but you will see quite a bit of volatility around the next few interest rate cycles, because central banks are all at that sort of peak level at the moment. I think your comment, Robert, that we think interest rates will go down, I absolutely echo that.
Okay, good. I think a question. This is it says, why would I go via the UK when I can send money from my own country? I think probably the best way to answer this, David, would be why would I use Halo as opposed to, another similar service? I think maybe you can kind of touch on that. I think that would probably be insightful.
Yeah, I guess there is nothing to stop you doing that. And, and if that's the simple thing and all you want is simple, then absolutely that's the right thing to do. Just, get your bank to send the money. The unfortunate thing is that you then aren't in control of the exchange rate that you get. Banks tend to be more expensive on exchange rates. It's not always the case, but mostly they are more expensive because they charge a wider spread compared to the interbank market exchange rates. And my experience of banks, and we're in business because banks don't do this very well. My experience of banks is that if you ask what's the exchange rate likely to do, where are we, can you show me a chart, all of those sorts of things, then they're really not very well set up to do that. The guys on my private client desk and corporate client desks, they are geared up to provide that kind of information, that level of information, and to help you make decisions that will advantage you rather than the bank. So there is no compulsion upon you to do anything anything with Halo Financial, but I think that I've been in the business for 28 years or something, and my experience is that a specialist is better than a generalist, and banks generally are generalists. So I think we provide a better service than a bank might, and the best thing you can do really is to challenge us, tell us what you want to achieve, and let's have a discussion about how we might help you achieve that. If we're not adding any value, then don't use us. It's as simple as that.
So, I think it comes down to even, why use American mortgages? And I think it all comes down to expertise. If you deal with an expert, I don't care if it's a medical procedure or a financial transaction, the people that you want to deal with are the ones that absolutely understand your situation. And I think that's just kind of the bottom line. So, I can probably answer this question for you, but I think, what if somebody is from Iran? Would they be able to use your services?
I can't trade Iranian. Unfortunately, it's nothing to do with me. It's just due to sanctions and restrictions from the UN, the EU, the UK Treasury, etc., etc. So I'm really sorry, but I wouldn't be able to help you with that.
Yeah, we even have the same issue, unfortunately, with U.S. mortgage financing. There are certain sanctioned countries that, unfortunately, even though you may reside outside of that country, if you're holding a passport for that country, you wouldn't be able to obtain financing, or in the case with David, to be able to do the currency conversions. My question for me, can I get a mortgage even if I have no US credit or US address? Absolutely. Again, because 100% of our clients are living and earning their income abroad, probably 70% of these clients have no US credit. So all of our loan programs are specific for this. We do like to see that you have credit in your home country. So, regardless if it's in a different language or whatever it is, most countries will have some sort of credit report. In the event you don't, that's still possible. It's just something that you need to contact us about. So I think it says, I think it was another question. I think there was a misunderstanding, not gross salary. In case, can you please stop deleting the questions? Well, in case it was 10% paid on top of gross as a contribution towards a retirement fund, do you take that into consideration? That would be probably not taken into consideration because it's not money that you would have to be able to spend on your mortgage, which is what is taken into account if you're using an income letter to qualify. So hopefully that answers. So where we would go would be off of your gross income that you receive or that you're paid, not on income that maybe you would receive in the future for your retirement. Why convert to pound and then to US, I guess to pound and then to USD? That is my question. We have a very similar service to Halo, hence my question, the double currency conversion.
Yeah, I was just reading through and working the connection. Unfortunately, it's an anonymous attendee, so I can't work out who is asking the continuity of questions. But the answer is there is no conversion to pound and then to USD. So the conversion can be from euro to US dollar. It can be from Hong Kong dollar to US dollar. It can be from whatever currency. There's no need to convert to sterling and then to US dollar. Otherwise, you'd be paying two spreads. That doesn't make any sense. So I hope that answers the question.
I think it goes to also the same question is I think it's not taking into account difficult countries. It's a Western country, but why go through the UK? I think what you're stating is there is no need to convert from whatever currency you're sending to pounds or sterling and then convert to US dollars. You're doing it in a very seamless process.
Absolutely. And the other question is, why go to the UK and then to the US? Well, as you say, it doesn't have to convert to sterling at any point, So as I say, if we're taking Hong Kong dollars and going to the US with that, that's absolutely fine. The answer to the question why to the UK and then to the US, well, if there's an advantage in the exchange rate and the service you're receiving, then why not? Moving money internationally is very straightforward these days, almost as simple as moving money internally. So there's no disadvantage, I don't think, to moving the money to the UK and then to the US. And the only reason to do it is if you're gaining an advantage in the service you're receiving and the exchange rate you're receiving. Otherwise, you wouldn't do it.
Okay, so I think that's all the questions that we have. I appreciate everybody staying on. I know this went quite long. I think there was a lot of interesting stuff that David had to offer. David, do you have any kind of last statements that you would like to make before we end this?
Only to thank everybody for tuning in, if that's the right expression for a webinar, and thank you, Robert, for arranging this. Hopefully it's been useful. Hopefully there are things that people have learned from this. Certainly, if there's anything that people would like more information on, then my information is available. So get in touch directly, and if it's not something I know an answer to, I'll find somebody that does. But thank you very much for getting involved.
Perfect. So David and Halo Group, thank you for your time. We really appreciate it, and we thank everybody for joining. Again, there will be a recording of this video sent out, and we normally send out a little bit of a question and answer thing for all of the questions that were asked as well, so you're able to kind of read and catch this up in our newsletter. If you haven't had a chance to sign up on our newsletter or also on Halo's newsletter, please go to the website and sign up for some useful information and a little bit of tidbits every week. Until then, we look forward to seeing you on our next webinar, which I believe will be in 2 weeks. You will receive an announcement pretty soon what this will be. Thank you again, everybody, and we appreciate your time. Bye-bye.
Thanks.